going to teach you how I used to trade in the beginning to get easy entries that make sense and I understand what's going on. It was one of the first mindsets that taught me patience and taught me how to have a trading plan and not be dependent on predicting where the market is going, but merely preparing for what it could do. That's a big difference in trading. So day 7, it's going to be mastering price hotspots. Other people call them price levels. So that's day 7. And this is, no matter what strategy you really trade, some form of what you're going to see in day 7 is going to apply to that strategy. This is like a backbone of a lot of trading psychologies, a backbone of it. So what is a price hotspot? It's a price where the market reacts. It's simply that. You know, people may say like support resistance, but this is not dependent on whether it's support or whether it's resistance, but simply an area where the market reacts and respects. So that's the first thing you need to know about price hotspots. The second thing is just understanding where to find them or how to identify them. Because once you get familiar with doing this, and once you train your eye to it, you'll be able to break down any chart, be able to mark it up, and have a plan for what you want to do. You know, and no matter what time frame you're trading on too. So here's the first aspects of how or what it is. I'm going to show you. I'm going to identify. I'm going to mark up this chart. And I'm going to label, well, identify all the price hotspots. So the first one, start from bottom to top, is going to be down here. Why that? Because look at the move. You know, the bigger the move that reacts from it, the better the hotspot. Or there's two rules actually with price hotspots. Let me write this down. So the bigger reaction from hitting the level, or the more price touches, or not necessarily touches, or is magnetized to that price. So you see, like, so for example, let's look at, this is one where the price reacts from a lot, right? You know, this move, this little area here. That's a big hot spot for price reaction. Whereas this one, I mean, this level here is a level where price likes to go and bounce off of and find and respect a lot. So it may not create as big of a move from it, but it's a solid wall where price respects. And you see, even in the instance where, let me zoom in here, even in the instance where it's broken, it takes strong momentum, see strong candles here, to break it. Strong candle to break it. So that's what you want to see if that level is broken. You know, over here, strong momentum to break it. Not a weak candles can't break it. It has to be strong momentum, strong candles to break that level. So those right there are your two bases of price hotspots or strong price levels. And one way you really identify this, one way you really identify this is if you zoom out and you see how price continually respects that level. Go down here, right? So even here, you see there's reactions there. Let's see. Let's go back and see how long. So we go January of 2019. Just to show you how, when you do it right, how reliable these are. So January, is it backwards? Yeah. So 2019, January. All right, let's zoom in. So the marking that I did as far as the price magnetization is respected. Oh, let me do it again. We're doing the 4 hour so you can see it better. Zoom out. So let's delete this one so you can see just the one I'm trying to highlight. So look, January 2019, that marking that I did for current week, like this week or last week, is respected all the way back here. Strong candles to break it, still strong candles. Comes back to it, gets close to it in February, reacts off of it in February again. So it continues the March of 2019. So when you do it right, you'll see a lot of instances, even in this consolidation, it's respecting the consolidation, because even in the consolidation, that level's not being broken unless there's strong momentum. See all through there, strong candle, strong candle. So when you do your zones right, you have a reliable sense of area from where to put your charts. So if I were to identify another one, let's go a little bit higher with this one. So another price hotspot. And this is what I'm looking for. I'm looking at these reactions here. I'm looking how this candles are strong to break it. Strong candle, you know, breaks and retests. See how it's, if it's not strong enough, it reacts and goes the other way. If it's strong enough, it'll break it. So that's what you're looking for. You're looking for an area where that's common. You see here, strong candles break it, or strong retest and reaction. Then down here. So now, let me go all the way to current. This is back in 2019. This is 2019 price action. Let me delete this one so there's no confusion. Actually, let me change the color. So let's go to current day price. Look, it respected off of it 2 days ago from a price level that I did from back in 2019. The markets aren't random. A lot of people think that. But these same play areas, so you go back here, this is February of this year. That same price level is respected. See, over here, back in January, beginning of the year, New Year's week, that same price level is being used. So when you're able to identify those points, you're able to have strong, you're confident in what you're doing. You understand what you're looking at. Well, here's another one. Another one there. Let me zoom back. So and you can literally stair step the entire chart. You know, think of it like Donkey Kong levels, like if you played Donkey Kong when you're little or not so little, depending on how old you are. So zoom that back in. So now you look at these price levels, you have an idea of where price is going to make reactions from. So if you have an idea of where price is reacting from, then you know your next play at all times. So now, like where price is at this current point in time, you don't have to predict where the market is going. You just merely react to what the market gives you. So you can have a setup or identification where if it goes down, you're looking for that. And then if it goes up, you're looking for this. And now you have two areas, whether it goes up, whether it goes down doesn't concern you. You know where your areas are and you can play those areas accordingly. So this is why you know the arrow software is so important, because it does this for you. But say you want to look for yourself, kind of validate what you're seeing on the software, this is how you do it. And you can literally go through and kind of, no matter what you're looking at, so we got GCAD. So no matter what you're looking at, that was a great trade. You can see what you're doing. So look at where GCAD is at right now. You have a little bit of this going on. So you have a scenario, right? You don't have to be a wizard. You can either look for that, or if it breaks down, look for that. Why here? Why did I stop here? Well, that's the next price hotspot. It's here. See how these touches reacting from it is magnetized and it's taking strong candles to break it. So that's the next price hotspot. Next one up here would be way up here. There's nothing. So yeah. So you have, just by looking at where things are at the present moment, you can see where you need to go next. Is anybody getting any value from this? Put some sevens in the chat if you're getting value. Perfect. Awesome, awesome. I like it. So now the market doesn't become confusing to you. Now, if you start, we talked in, I think it was day 5, about the different types of support and resistance. That's where you can start maybe combining a few things, right? You have another horizontal support and resistance here as extra confluence. Or if you're using more indicator-based support resistance, maybe you put a Bollinger Band up and see where your next levels are. Or maybe you do like a moving average. This is how you start to construct a strategy. So when you're able to get to a point to where you can construct a strategy, then you understand the markets. Now, there's a lot of strategies that work already, so you don't have to do that, but that mindset of being able to see the market and strategize the market for yourself will make you better even in using other proven strategies. So like, you see this, for example, right? You got your close, you got this price zone here. You got the Fibonacci going for you. Then it's close to the moving average. It may bounce off of that. But let's look at day 2 stuff. Day 2, the candles. What do we talk about with candles? You got your hammer forming right here. You had a doji right here. You had an inverted hammer. All reversal aspects as far as candles go in the moment. Think about this. Like, say, look at this, what these last two candles. These last two candles. you have your downward candle, then you have your hammer. And what if the next candle, is like this? What if the next candle is like this? Where you got something like that going on as your next candle. Then you have your candlestick formation as maybe a final confirmation. So now you start to see we're putting this stuff together that, one, you were able to use the hotspot as a basis to your analysis to have an idea of where to focus. And then you start to use your other confirmations to quantify what you are seeing. That's how you start. That's how you trade. So, personally, I like this either way because I have clarity either way. We're looking at, maybe going up to this or doing something like this where it goes down. We have clarity. London session will tell us to tell. But you get it. You start to get it when you're able to do it. And when that light bulb goes off and you're seeing what I'm seeing, and you're seeing that, hey, I don't have to know everything, but if I know enough things well or a few things well, you can do good in this. I've seen a lot of people be successful in trading being a one-trick pony. They got really good at doing one thing in trading, whether that's, like one of my mentors, whether that's trading, what's called head and shoulders. Another one only trades Fibonacci, where he looks at this and waits for that 61 and he trades it. So, he only trades that aspect of trading. Maybe has a couple other confirmations, but he has one basis, one mindset, and he looks for just that. So now it just becomes a lot easier. So you can literally go chart by chart and look for your next areas. If it doesn't look clear to you, on the time frames that you're looking at or where you're looking at, you can go to another chart. So now, let me look for another one that I like. I already marked up that one. So see here, this is something. When did I mark this up? I have no idea when I marked this up. Give me a time. No. Let me see. I wouldn't have marked it up the other day. It would have been somewhere. I marked it up back here. Yeah. So look, this is a chart that I marked up in May. This is new. But these three bars, it was in here. Yeah. It was right in here. So I was marking up these areas in May. Now in July, those areas are back in play. Look at the reactions from those areas. Because, I hadn't looked at this chart in a while. But look at the market still playing out to those same markups. And with those same markups, now, of course, you may have to adjust a little bit up and down slightly. But if you do it right, you don't have to do that much adjusting at all. But look, like I have my plan. I can look for this, or, which may be more likely, look for this right here. Why there? Well, another price hotspot right here. See those reactions? That strong candle. Go back a little bit, probably get some more. See, strong candle to break it again, way back here. So now I have what I'm looking for in this chart. That's the beauty of this. So let me see. Here's the other thing that confirms a price hotspot. It's what happens candle wise when it hits. So we're talking about that reaction. So let's dive into that reaction side of things. So let's do a good one. Let's see here. Like when you see that the price is actually going to respect that, like the telltale signs. So one way you can do it, let's look at this one, because in plain view, you wouldn't think that this candle gave you enough of a confirmation to take this trade based off what you learned in candlesticks. But you got to think about it. How many 15-minute candles is in this one candle? 4. How many 15-minute candles is in this one candle? 4. So if we go to the 15-minute, we realign my chart. There. Go to 15-minute. Now look what you see. You see your doji. You see your momentum down. You see your momentum down. You see your doji, and you see your shift. You see your shift at that level. So your momentum down, your momentum indecision, and your momentum back up for a nice confirmation of a trade. You follow those confirmations, you see in here, you got that confirmation that is a valid hotspot. And look how clean this trade is. You're down 2 pips, and it went up 20. It went up 20 something pips. And if you would have waited, and this is not a volatile pair. This is NZD Canadian. This doesn't move a lot. So 20 pips is a good move for this pair. And even now, this one would have been hard to catch. You would have had to really, really be lasering in maybe 3 or 5 minutes to try to catch that. But you see those reactions. You see, now let me show you. Let me go back to the 1 hour. Let's look at another one. Look at another one here. EuroCAD. So yeah, we can definitely do some price entries on EuroCAD. So the other thing too with price hotspots, the higher the top, it's a hierarchy on levels, on price levels. The higher the price level that you find it on, the better. So like say this one right here. This one I would consider a 4-hour level. And with this one, I don't know if it lets you. Nope, it doesn't let you. So let me do the line real quick. Let's do the line. So you can go through and do something like this where you mark up your chart. So 4-hour price level. I want it on the top, on the right side. And let's say I have a color code, right? So let's say my color code for 4-hour is blue. No, not the. Let's say my color code for 4-hour is blue. Then I can, mark up. So let's actually copy this. So clone. So this is where you start building an analysis. So 4-hour, any more 4-hour ones, zoom out a little bit, see if I can get more understanding. So right here. It actually copied right on the spot. And then see how I'm lining up things, trying to get as close as possible. Now, I'm not the biggest fan of using an exact line. I like using zones. But like say if you want to, do some price labels, you can do something like what I'm doing now. And then you can take, like I like using the channel and holding shift. Like if you hold shift, it'll stay straight. If I don't hold shift, it'll do all types of stuff at any angle. Back. So this can be how I'm marking up a chart, right? So I got my 4-hour price level. So those are my main levels. And then the big one up top. Here. Copy, paste. And like when you do this stuff, like, and you do it, like have that repetition and doing it, you start to be able to just go into flow and understand what you're looking at. So now I have I want to put that higher. Yeah, let's shift that, get a better level. Right there. It's actually a little bit higher. Yeah, I got the candles there, reactions, strong candle reaction, strong candle, strong. Yep. So that's a better level. So now if I go back and see it matched with that one too. Now I have an analysis like on the 4-hour. Like if I'm really trying to really carve up a pair and really dissect it and know exactly what I want, I would kind of do this on multiple time frames. So now, you have an out on the hour. So right now it's not too many levels, but for the hour versus the 4-hour, well, you have a couple. Just it's a small level there. There and down here, which really isn't relevant right now. So let's say we're going to make our 1 hour green. We'll make our 1 hour ones green. So 1 hour price level. And like when I only traded price levels, like in the beginning, like as far as my first profitable trades, this is how I did it. And this is still good to do, like no matter what strategy you're trading. Like if you have the time to do it, and maybe take like maybe 2 or 3 or 4 pairs and really, ice them down like this and just trade those. And especially when you're just starting out, you'll make your money on a few pairs and be fine. This is how you do it, One of my mentors is like, hey, just watch me mark up a chart and you'll understand more than me talking to you. You're welcome. So we got another one here. See those strong levels, reaction, 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 strong level, reaction, reaction. So right there. So I got, I forgot I already had that. So copy, paste twice. There. And there. So now, just by doing these price levels, you understand where the volatility is on the markets too. This is how you understand it. You see how down here, or as far as like the distance in your moves, as far as for take profit, stop losses, you understand where you want to put things. So you see down here is more congested, even though there was clean levels to trade off of. There is more congested um, hotspots. So it's a good and a bad thing. The good thing is you can do a tighter stop loss. You don't have to go. You don't have to go really far down. The bad news is you may have to be more conservative in your take profit because there's multiple points where it can react from, like in stuff like this, where you have small moves. Now, you're content with these small moves, which if you know how to do your trades right, you don't need crazy big moves. But you can see that you can have nice solid moves even in the small parts. But now when you get up here, where it's not as many price levels, the distance between your trading and your take profit can maybe increase because your price levels are more spread across. So now if I'm looking over here, I got, instead of having 40 pip zone, which isn't bad at all, maybe it's a little bit more stretched out now, and this is a 80 pip zone. And then say down here, this is 100 pip zone. So if I get this move to happen, especially like something like this happens where I get the price to come down, it comes and then gives me a little bit of strong reaction and then comes down like that, then you got the reactions, and then you got the strong move and then the retest, and you're good to go. So that's how you can plan your charts. Is this making sense to anybody? Let me know if it's making sense. Let's see.
Yes, it is.
Perfect. So with that concludes day 7. Now this is one you probably want to rewatch a few times, but if you can understand just this, you really have an idea of how to look at any chart and things are clear to you. And when you have clarity in your trading, you can make money. If you're not clear in your trading, you will lose money. It's as simple as that. It doesn't necessarily matter like what the individual strategy is as much as you having clarity in your trading. You may not have as good of a strategy as somebody else, but you probably will make more money than that same person if the other person with the better strategy is not clear on the strategy that he's trading or she's trading. So having that clarity is one of the essential ingredients to really understanding the markets.